I'm going to do a couple of past paper questions on debtors today. Okay, the first question, just a financial indicator and comment. They give you some information and they ask you to calculate the average debtors collection period in days. The formula to calculate average debtors collection period is your average debtors, so in other words, half of your opening debtors plus half of your closing debtors, divided by credit sales, and they tell you your total sales is 3650 and 70% is for cash, which means you take 30% of 3650, which gives you 1095, and then because you want your answer in days, you multiply it by 365, and that gives you 65 days. They then ask you whether the manager should be concerned about the average debtors collection period. You're told here that debtors are allowed 30 days to settle their accounts. They're taking 65 days. So that's the first issue. The other issue is last year it was only 29 days that they were taking to settle their account. Now it's 65 days. So either of these answers would be acceptable here. You can either say that the average debtors collection period has increased from 29 days to 65 days. Okay, in other words, by 36 days. If you want to be fancy, you can say by 124%, or you could say they're allowed 30 days, but they're taking 65 days, which is more than 2 months to pay you back. Alright, then the next question is reconciliation and some age analysis. Okay, the first thing they ask you to do is to calculate the correct debtors control balance as well as the balances for the debtors listed in the answer book. Okay, so we start off with the debtors control balance, okay, that you fill in here, and then each of your debtors you would start off with the opening balances that they were given. Now when you're reading through the errors, you need to decide where the error has been made. Has it been made in one place or has it been made in more than one place? So the first one, for example, tells you that the debtors journal was overcast by 3,500. So it's only the debtors journal total that was wrong here. So there was nothing wrong with this debtors ledger. But if the debtors journal was overcast, it means we've added 3,500 Rand too much to the debtors control account balance. So you're going to take that 3,500 and subtract it from the balance. Okay, the next one. An allowance of 800 Rand granted to Amla for damaged goods dispatch was entered to the wrong side of his account, so only Amla's account is wrong here. If you grant an allowance, you're supposed to decrease what he owes. If we've posted to the wrong side of his account, it means we've increased what he owes. So to fix that, you're going to need to double that amount of 800. You have to first of all decrease by 800 to get to 0, and then decrease it by 800 to get to the correct amount. So over here, with Amla, you see I've minused and double 800, 1,600. Okay, the next one. Goods sold on credit Bennett for 6,300 Rand was entered incorrectly to his account as 3,600. Posting to the general ledger was correct. Okay, so we said that we reported rather 3,600, but we actually sold for 6,300. So we need to add 2,700 Rand, which is the difference, onto what he owes us. In the next one, the direct deposit made by Ngidi was recorded in the account of Amla. So it was Ngidi that was paying us back, and we said Amla paid us back. So we need to add back to Amla 2,500 and subtract from what Ngidi owes. Now, if I were doing this model answer, I would show plus 2,500 minus 2,500 Rand under your debtors control balance as well. I'm aware of the fact that they cancel each other out, but if you had done that in the general journal, you would have debited debtors control and credited debtors control. So strictly speaking, you are supposed to show plus 2,500 minus 2,500. That way the examiner can see you know what to do and not you just left it out because you didn't know what to do. However, this is taken from a matric paper, so obviously they're not expecting you to show that increase and decrease. So it's up to you. I would put them in, but according to this, you don't actually have to. Alright, and then goods sold on credit to Naidu, 4,500 Rand was not recorded. That means our debtors control account balance is too low. We need to add 4,500 Rand here, and Naidu also owes us that 4,500. You then work out the total, you add up each debtor, and this 75,600 must be the same as the 75,600 in the debtor's control. So we've reconciled the differences. If you look here, the balance here was different to the debtors list total. Now we've fixed up the errors, we've reconciled the differences. So now the balances, totals are the same. Right, then they ask you to refer to information C, which is an age analysis. Remember that shows you a breakdown of how much debtors owe you for each period of time. And they ask you to calculate the percentage of debtors that are not complying with the 30 days credit terms. So if you have a look here, the total amount owing is 70,000. The people that are not complying are the people that are sold on credit rather to for 60 days and more than 60 days. So you're going to add those two up. Here gives you 36,400. You divide by the total that debtors owed you times 100 over 1 because you want a percentage, and you give 52%. And you get 52% rather. Okay, and then they say here, list 2 internal control measures that branch traders can use to ensure that only reliable clients are granted credit. To do that, you need to do a background check on people to make sure that the people you're selling on credit to are actually going to pay you back. So perform credit checks. You can either get credit references from businesses or in the credit bureau. You can check someone's employment history to see that they get, together with a salary, regular salary, paid into their account. If you can see that they're earning a monthly salary month after month, they are more likely to be able to pay you back. You can also make sure that you get proper contact details, residential, postal address, contact numbers, etc., so that in the event that they aren't paying you back, you actually are able to contact them, either by phone, by email, or whatever. Okay, so you want to make sure that when you say you're selling on credit to only reliable clients, you're selling on people that are likely to pay you back. Okay, that's all for this reconciliation. Thanks.